Good morning, guys. Good morning. Can you hear me? If you can hear me, please drop a comment. If you can hear me loud and clear, drop a comment. Can you hear me loud and clear? Drop a comment if you can hear me loud and clear. Drop a comment. Drop a comment if you can hear me loud and clear. Good morning, good afternoon, good evening, depending on where you're connecting from. Please confirm you can hear me loud and clear. Sure, you had a great weekend, and I want to believe you are fully prepared for trading this week. Are you prepared? Are you prepared? Let me know in the comment section. Doesn't matter what your experience was like last week. Doesn't matter whether you ended the last week in negative or in profit. This week is a new week. It's a new week. Your past performance does not determine your future performance, okay? Your experience last week does not determine your performance this week, okay? Good morning, good morning. Can you hear me? Mr. Raphael, good morning. If you can hear me, drop a comment. Let me know what pair you are considering trading this week. Let me know what pair you are considering trading this week. If there's any pair you want me to analyze, let me know in the comment section. Can you all see my screen? Please confirm you can see my screen. Confirm you can see my screen. Good morning, Mr. Raphael. Good morning, Mr. Debayo. Confirm you can see my screen. GJ and good. Okay, that's from Mr. Debayo. If you have any pair you want me to analyze, let me know in the comment section. This week we should expect high volatility in the market because CPI, PPI data will be released this week. US CPI and PPI, that is Consumer Price Index and Production Price Index data will be released this week. So let's start by looking at the calendar for the week. So today is Monday. There are no major news today. So we might not see much volatility in the market today because there are no major news to influence price action. Okay. So no major news today. Tomorrow is Tuesday. Canada will be releasing its CPI data tomorrow. And the United States also will be releasing its core CPI data tomorrow. So USD CAD will be a good bet to consider trading tomorrow. Okay, all you have to do is just compare the data. Okay, if the value for US dollar, CPI for US dollar is positive and that of CAD is negative, then we'd expect dollar to be bullish. Okay, but if CAD is positive, if the data comes out positive for CAD and it's negative for the dollar, then we should be considering selling USD CAD after this data release. Okay, then on Wednesday, GBP Great Britain will be releasing its CPI data on Wednesday, and core PPI will be released from the United States on Wednesday by 1:30, and by 7 a.m. Great Britain will release its CPI data. Then on Thursday, Australian dollar employment change and unemployment rates will be released 2:30 a.m. Nigerian time, and by 1:30 p.m. we have core retail sales from the United States. Okay, so Monday, from tomorrow, Tuesday, Wednesday, Thursday, expect high volatility. high volatility in the market, and volatility offers you opportunity to make money if you know what you're doing in the market. Also comes with high risk, so you need to manage your trades. Okay, manage your trades like a professional. Don't over leverage. If you don't know what you're doing in the market, if you are not a fundamental trader, this is not the week for you to over leverage. Very important. Okay, the market will provoke you this week to revenge trading. You just have to control your emotions. Okay, there will be a lot of temptation this week to increase your lot size so that you can make more money. Just know what you're doing in the market this week. Trading is not gambling. It's a business. It's a business. So know what you're doing, please. Okay. So let's go to the charts. Let me know what pair you want me to analyze. So let's start by looking at the dollar index. Last week, dollar was strongly bullish. Last week, dollar was bullish. Okay, though last week I was expecting dollar to retrace. That didn't happen last week. I was expecting dollar to retrace. You can see these fair value gaps I identified last week. That was my expectation on dollar, but it didn't play out last week. It was bullish all through last week. Okay, so I'm hoping this week dollar would retrace. Though dollar is still bullish, it's obvious on the weekly time frame. Okay, it's obvious that dollar is bullish at the moment. And the way I see dollar might be bullish for a long time. From what I'm saying, this is the weekly time frame. This is a higher time frame. Okay, you can see the pattern we had here. 2 weeks ago, we had what looks like an hammer, right? This is an hammer because the wick below is 2 times the body. Okay, the wick below is 2 times the body, so we can't call this a spinning bottom. This is an hammer. Some people will call this pin bar. Okay, so this is an hammer, and you can see the next candle, the bullish candle, which was last week candle, closed above the high of that hammer. That tells me demand. Okay, that communicates that demand is higher than supply. And when demand is higher than supply, you should look for opportunity to buy. Simple. Don't complicate it. Okay, demand is higher than supply, you look for buy. Okay, so I would love to see dollar retrace. Okay, I would love to see dollar do a little retracement. So you can see we have this fair value gap on daily time frame. Dollar long term is bullish. Okay, so okay, we have this tiny, it's a tiny fair value gap. Yeah, a tiny fair value gap. Okay, so this was last Friday candle, then this was Thursday candle. So after the breakout from this resistance, what do you think retail traders will do? After the breakout from this resistance, what do you think retail traders will do? Okay, you should think like a retail trader and execute as institutions. Okay, so what do you think retail traders will do? Retail traders, this is a breakout for retail traders, breakout from resistance level. Let's jump in and start buying, right? So most retail traders would have executed buy after the formation of this breakout from this resistance. And where would they have their stop loss? This is where they will have their stop loss. Okay, so there's a high probability the institutions will go for their stop losses before buying. So I think this will be the next draw on liquidity. And since there is a fair value gap below that low, there is a high probability they will go for that fair value gap. They will feed that fair value gap. So this is where I will be considering buying the dollar. This is where I will be considering buying the dollar. So for today's market, my bias for dollar is bearish. Okay, for today's market, my bias for the dollar is bearish. Let's go down to 4 hours, see what's happening on 4 hour. So you can see how the previous 4 hour candle, what pattern is this? This is a shooting star, right? Because the wick above it is at least 2 times the body. So this is a shooting star. So that indicates change in trend from bullish to bearish. So I think what they did this morning was to sweep the liquidity. I think this was last week high. I think that was what they did, was to sweep the liquidity residing at the high of last Friday candle. That they have achieved. And after sweeping the liquidity, what do we have here? A shooting star. So that's a sell. Okay, so let's go down to 1 hour. So this is what we have on 1 hour. On 4 hour, we had a shooting star. On 1 hour also, we have a shooting star here. This is a bullish shooting star. And when a bullish shooting star forms, you have to wait for the next candle to close bearish before you execute a sell trade, right? This indicates that the trend is about to change from bullish to bearish, right? but you have to wait because the body of this candle is still bullish. As you can see, this is a breakout for retail traders. There's a breakout from a resistance. Most retail traders will jump in and start buying, right? This is a breakout. So you don't just jump in because some persons would buy from this point because this is a breakout. You don't just jump in and start buying because a candle closed above the resistance area. You also need to consider how the candlestick closed, the pattern. So you can see this could just be stop ons because a lot of retail traders will have their stop losses at this high. So what they did was to clear their stop losses, sweep their sweep liquidity. Then you can see the pattern that formed. This is a bearish reversal pattern, and the next candle that closed engulfed that shooting star. It closed far below the low of that. That should tell you that supply is increasing. Supply is higher than demand at this point. Supply is higher than demand. And when supply is higher than demand, what do? You look for sales. So you can see all these lows. These are areas of liquidity. And we have this fair value gap. So this will be the next draw on liquidity. Okay. If price successfully breaks out from that zone, then it's going to go down to fill this fair value gap. Then below that, we have this fair value gap, this low here. Okay, so that is it for US dollar index. Look for sales. Okay, so after the formation of this 1 hour engulfing candle, a fair value gap has been created on 15 minutes, 5 minutes. If you go down to those time frames, you'll be able to identify. You can see we have this fair value gap here. So this would be a good area. You don't want to risk selling from the current market price. Then you could patiently wait for price to pull back to this zone. But as you know, everything in trading is probability. Nothing is 100% guaranteed. There is no guarantee that price will pull back to this zone. So I like to go in, though price could pull back to this zone. I like to go in with small lot size. I go with small lot size. If I'm trading with zero, if my normal lot size is 0.1 lot size, let's say I want to use 0.1 lot size on this trade. Instead of waiting for price to pull back to this zone before I would sell, I could go in with 0.03 or 0.04. Okay, so when price comes into this zone and I see my setup, I see my pattern, I take more trades. Okay, that's how to trade. Nothing is 100% guaranteed, it's probability. Okay, so that's it for dollar. I'm bearish on the dollar for today's market. If there's any pair I want me to analyze, please drop it in the comment section. Once I'm done analyzing dollar index and yen basket, we'll look at those currency pairs and instruments that you want me to analyze. Okay, so let's look at yen basket. Okay, so let's start with the weekly time frame. Last week was strongly bearish on yen, and like I told you, yen, there's a high probability yen will come fill this gap. So I see every buy on yen basket as a retracement. As I see it as a retracement. Every buy on the yen is a retracement. Okay, so we could wait for a little retracement on yen before selling it. Okay, we could wait for a little retracement on yen before selling. So after the close of last week candle, last week was strongly bearish, strongly bearish. So after the close of last week candle, let's see the pattern we had on 4 hour. Okay, so we had this on 4 hour time frame. Okay, this was the last candle for last week. Yeah, we had an armor candle. Most retail traders would have executed by stop losses residing at this low. So today they've swept the liquidity residing at this previous low. And let's go down to 1 hour to see the pattern that formed on 1 hour time frame. Sorry, 4 hour. Let's go down to 4 hour. Let's see. So you can see the pattern we had on 4 hour time frame after liquidity residing at this low got swept. You can see this pattern. What pattern is this? This is a spinning bottom. This is a spinning bottom. It has a small body. This is a spinning bottom. You can see. So this is a bullish reversal pattern. This is a bullish reversal pattern. Like I said, we should expect retracement on yen basket. Personally, I can't sell yen at the current market price. It doesn't make sense to sell yen. Yen has been bearish for weeks now. So it will not make sense to start selling from this point. There has to be a retracement to a premium area. Okay, so I think yen is likely going to pull back this relative equal high. You can see this high here. You would agree with me that a lot of retail traders would have executed sell. Many would have sold yen because of this candlestick, this shooting star candle. And where would they have their stop loss? Their stop loss will be residing at this previous high. So there's a high probability they will come sweep the liquidity residing at this previous high. Also, this relative equal high is an area of liquidity, and this might be the next draw on liquidity. This fair value gap on 4-hour time frame. This could be the next draw on liquidity on yen. Okay, so we had on 4-hour time frame. This is a spinning bottom. We had an engulfing because this candlestick closed above the high of this spinning bottom, which indicates that there are more demand than supply. So you could see what's the reason for this retracement, this pullback here. If you go down to 1-hour time frame, there is a fair value gap. A fair value gap was created after the formation of this bullish candle. Let's confirm that. That's the reason for the retracement. Okay, so let's go down to 1 hour. Okay, so on 1 hour, let's see if we had a fair value gap here on 1 hour. We had one here on 1 hour, but let's go down to 15 minutes. Let's go down to 15 minutes. Okay, so you can see the fair value gap we had here. You can see this fair value gap. Can you see this fair value gap here? That could be the reason for this retracement. Okay, so we had this fair value gap here. Can you see? Can you see the fair value gap? See what happened after price filled that fair value gap? You can see we had an engulfing pattern here. You can see. So this is the buy. This is a buy setup. This is a buy setup. Okay, and we had this resistance on support here. You can see. Can you see that? Okay, so this is a buy on what I see on yen is a buy opportunity. It's a buy opportunity. That's what I see on yen. That's what I see on yen. Buy opportunity. But long term, yen is bearish. Like I said, every buy on yen basket is pullback. Know that, please. It's pullback. Okay, so let's look at currency pairs now. Let's look at currency pairs. I see you all, Mr. Raphael, Mr. Tonda, Victory, Clement. I see you all. I see you all. Okay, so let's look at currency pairs. Let's start with GJ and gold. Please, let's start with GU and EU, GBP USD. Okay, so since my bias for dollar is bearish today, I should be considering buying GBP USD. For those of you in the VIP community, I told you guys my intention, my plan to buy the Euro USD, and I shared with you guys the reason for my bias on Euro USD. Currently holding buy on GBP USD, on Euro USD. Okay. So let's start with the daily time frame. Let's start with the daily time frame. Good. So I hope you guys executed the trade on Euro USD. Okay, so on Euro USD, this is what we had last week was strongly bearish on Euro USD. Strongly bearish. Okay, last Friday candle, as you can see, was strongly bearish. Let's go down to 4 hour after the close of last Friday candle. What pattern? Now the low of last week, last Friday candle is an area of liquidity, and that they have swept this morning. The low of last week, you can see this low here. This was the low of last Friday candle. You would agree with me, after the formation of this spinning bottom, most retail traders would have bought. And where would they have their stop losses? Their stop losses will be residing at this low. So what they did this morning, the first thing they did this morning was to sweep the liquidity residing at this low. And after sweeping liquidity, what pattern do you have? What pattern do you have on 4 hour time frame? after liquidity got swept. What pattern is this? This is a doji. This is a doji indicating change in trend. Doji is also referred to as indecision candle, right? Indecision candle. Now, you are advised that when a doji forms in a downward trend, you are advised to wait for the next candle to close bullish before you execute the trade. If you're trading candlestick pattern and you see a doji form in a downward trend, doji forming in a downward trend does not confirm that you have enough buyers in the market to push price up. It's an indecision. And since the preceding trend before the formation of that candle is bearish, there is a high probability that the bears can still push price down. So you don't jump in and start buying because a doji candle forms in a downward trend. So you're advised to wait for the next candle. Before you execute a buy trade, you want to ensure that the candles that are printing on the chart are bullish candles. Bullish candles can't be printing on the chart and you're looking for sales. Or bearish candles are printing on the chart and you are looking for buys. No. So you have to wait for that confirmation candle to form. It has to close. As it is now, most people would have jumped in and start buying because the body of this current 4-hour candle is bullish. This body that is bullish now, before this candle closes, can turn bearish. So you have to wait for the close. The candle must close before you make a decision with that candlestick pattern. It must close. But the impatient traders would have jumped in and and start buying. But the smart ones also can use multiple time frame, go down to lower time frame, identify candlestick patterns of those time frame, resistance and support on lower time frame before executing. Okay, for someone like me, I told you I have a trade on Euro USD after the formation of I think a bullish candlestick pattern formed on 4-hour time frame. I'm going to show you that after analyzing GBP USD. So we had a doji, and after the formation of this doji, I'm sure a fair value gap was created on lower time frame. Go down to 1 hour and 15 minutes time frame. Identify all the fair value gaps on those time frames so that if you are buying, you want to ensure that your stop loss is below all the fair value gaps. Okay, from 1 hour to 1 minute time frame, identify all the fair value gaps and ensure that your stop loss is below the fair value gap. Okay, so this is 1 hour time frame. You can see we have this fair value gap. So price is likely going to come fill this fair value gap. Okay, price is likely going to come fill this fair value gap. Let's go down to 15 minutes. I'm sure there is a fair value gap. Okay, so we have this on. Okay, so this is fair value gap on 15 minutes, and we have this fair value gap also on 15 minutes time frame. Okay, we have this fair value gap also on 15 minutes time frame. So price is likely going to pull back to fill this fair value gap before going bullish. So if you don't want to buy from the current market price, you can wait for price to pull back to this zone. But like I said, it's all probability. It's all probability. So it's best if you have good capital. If you have good capital, you're trading above 0.01 lot size, you can go in with 0.01. Okay, while you wait for price to pull back to this zone for you to take your second trade. But if you don't have good capital, you are trading with $50, you can't risk the maximum lot size. Maybe you can use on that is maybe 0.001. That is following proper risk and money management. You're not supposed to risk more than that. That's the lot size you're supposed to be using on a $50 account. Okay, to be conservative. Okay, so you could wait for price to pull back. If your capital is small, you need to wait for price to pull back before you take a buy trade. But if price does not pull back, remember, you're going to miss that opportunity. If price does not pull back to this zone, you would miss that opportunity. That's why you need good capital to make good money in this market. You need good capital. You need good capital. To be able to manage risk properly, you need good capital. Okay, so that's it for GBP USD. Okay, you can wait for price to retrace. So where is GBP USD heading to? Let's see for our, I think there's a fair value gap GBP USD might want to fill. Okay, so this should be the first target for GBP USD, this fair value gap on 4 hour. Okay, this should be the first target for GBP USD. Okay, That's like 40 pips from the current market price. So if my first target is 40 pips, I can decide to risk 30 pips on this trade, right? I can decide to risk 30 pips on this trade. And if you want to take this trade, your stop loss should be at the low. Like I said, it has to be below all the fair value gaps. So the low of this candle will be the best price to use as your stop loss. So calculate the risk from this point. This is 1.3483. So this point, that's about 33 pips. 33 pips, and your first target is 40 pips. The risk reward is poor, not too good. Okay, not too good. So it's best to wait for price to pull back to this zone. But for those who have good capital, you can go in with some small lot size. Okay, take partial entry, then later on you add more trade when price pulls back to the fair value gap. Simple. Okay, so that's it for Euro USD. Let's look at other Euro USD. Okay, so you can see the pattern that formed on 4-hour time frame. I think first thing they did this morning was to sweep liquidity. Okay, let me start with the daily time frame. So far today, the market has been bullish after sweeping the liquidity residing at the low of last week candle. This is the low of last Friday candle. Yeah. Okay, last Friday and Thursday low has been swept. Okay, then let's go down to 4-hour. So after sweeping liquidity residing at that low, what pattern do we have here? Hammer candle. Hammer candle. So you cannot see an hammer and sell. You can't see an hammer and be looking for opportunity to sell. This is a buy pattern. This is a buy pattern. So after the formation of that hammer, okay, for those of you who took the trade, should be in small profits now. If you took the trade, should be in small profits. Also, if you go, you can see on 4-hour, we have this fair value gap on 4-hour. Can you see that? So price filled this fair value gap on 4-hour. You can see that. And after filling that fair value gap, what pattern do we have there? This is hammer buy. Okay, let's go down to 1-hour. We definitely had created fair value gaps on lower time frame. So if you have not bought Euro USD, you could wait for price to pull back. You can see we have this fair value gap. So you could hope or wait for price to pull back to this fair value gap before you buy Euro USD. Okay, before you buy Euro USD. Okay, so that's my take on Euro USD. My bias for Euro USD today is buy, buy, buy. Okay. Um, I'm not an expert in plotting trend line. I'm not an expert in plotting trend line. I don't like teaching people what I'm not good at. Okay. So if you want to learn how to plot trend lines, you can go on YouTube. Okay. Go on YouTube. Or if you do a search on YouTube to look for someone that is very good at plotting trend lines. Okay. I'm not a pro in that. I teach what I understand, what I'm very good at. If I don't know it that much, I don't want to delve into it. Okay. So I will get you. There's this lady that trades that uses trend line, Tori trades. Yeah, Tori. Search for Tori on YouTube. That's what she uses for trading. I think this guy interviewed her recently. What's his name again? Wisdom interviewed her. She shared her strategy in that interview. I'll look for the link and share with you. Okay. Um, okay, so that's my take on Euro USD. You could wait for price to pull back to this zone before you buy. Trend line is subjective, it's not objective. If you want to be a profitable trader, you have to be objective. Okay, trend line is subjective. If you see 10 persons using trend line, if you see them for them to plot their trend line on the chart, they will use different levels to plot their trend lines. It's subjective. Okay, it's subjective. That's why I don't use it. A trader must be objective. Okay, but I'll get to the video. I'll get to the video. Okay, so that's it for Euro USD and GBP USD. So let's look at GJ and gold. Let's look at gold. So let's start with the weekly time frame. So on the weekly time frame, last week was bullish. The previous week also was bullish. As you can see, it was bullish, bullish. Past 2 weeks, gold has been bullish. Let's go down to daily. Okay, so this is what we have on a daily time frame. So what can you see on the daily time frame? What can you see here? At first, I think gold came back, pulled back to fill this fair value gap. Can you see that? It pulled back, filled this fair value gap. So here also, it came back to fill. Let's go down to 4 hour. Let's go down to 4 hour. Based on what the pattern I'm seeing on the chart, gold is still bullish. Gold is still bullish. So if you go down to 4 hour, there's a fair value gap on 4 hour time frame. Gold filled last week. You can see this fair value gap on 4 hour time frame. You can see this fair value gap. Can you see this fair value gap? Gold pulled back to fill this fair value gap. Gave us a bullish pattern. You can see the pattern that formed after it filled that fair value gap. We had a doji and the next candle engulfed, closed above the high of that doji. So that would have been a good entry for buy on gold. Okay, so today you can see this candle closed as a shooting star. The next candle closed as a spinning bottom. So after the close of that shooting star, I'm sure a fair value gap was created. A fair value gap was created after the formation of this shooting star, and this high was an area of liquidity. So what they've done this morning, you can see, they know a lot of retail traders would have executed sell after the formation of this shooting star. Where would they have their stop loss? Stop loss will be residing at this high. So what they've done this morning was sweep the liquidity residing at that first high. You can see that. Now let's go down to 1 hour time frame. Like I said, the fair value gap was created after the formation of this shooting star. Let's confirm on 1 hour and 15 minutes time frame. So you can see the fair value gap is created here on 1 hour time frame. Let's still go down to 15 minutes. Let's go down to 15 minutes. So on 15 minutes, we had, okay, so I'll work with the fair value gap on 1 hour. That is obvious. Okay, the fair value gap on 1 hour is obvious. So you can see the fair value gap is created on price broke out from that fair value gap. Price broke out from that fair value gap. Okay, so if I'm bearish on dollar today, then it's likely gold to be bullish today. It's likely gold will be bullish today. Now you can see what we had here. We had this armor candle, the next candle engulf, and also on 1 hour you can see we had this fair value gap on 1 hour. Let me go to 15 minutes so that you see it clearly. There was a fair value gap here, and that could be the reason for the retracement. So you can see this fair value gap it's created here. Can you see this fair value gap? That could be the reason for the pullback. You can see that could be the reason for this pullback. If you go down to 5 minutes, there's still a fair value gap below this one. That's why. Let's go down to 5 minutes. I'm sure there's still a fair value gap below that area. So you can see this is 5 minutes, you can see we have there's a fair value gap here. So that could be the reason for the pullback. Can you see this fair value gap on 5 minutes? Can you see this fair value gap? So that could be the reason for the pullback. So price pullback and there's strong, you can see price pullback to that fair value gap, and you can see there's rejection from that fair value gap. So let's go back to 15 minutes. So let's see the fair value gap. So right now the market is still trading above this fair value gap on 1 hour time frame. So what I see here is a buy on gold, buy. Okay, now gold might pull back. This would be a very good area to consider buying gold. If you want to buy, you should wait for price to pull back, fill this fair value gap, okay, before you buy gold. That's my take on gold. You can see this fair value gap, yeah, on 15. This is 15 minutes time frame. Okay, so you should patiently wait for price to pull back to this fair value gap. ICT students will call this IOFED, Institutional Order Flow Entry Drill, right? Those of you trade ICT, you'll call this IOFED, Institutional Order Flow Entry Drill. Why? You have this previous high in confluence with this fair value gap. When you have a previous high, when a previous high is in confluence with a fair value gap, that is an IOFED. I hope I'm correct, ICT traders. So this would be a very good area to consider buying gold. Okay, but if 4-hour candle closes below this zone, if 4-hour candle closes below this zone, then we could see more sells on gold. Okay, but if a bullish reversal pattern after price fills this zone, if a bullish reversal pattern forms after price fills this zone, then you should look for buy on gold. I hope that is clear. So that's my take on gold. Next is GJ, GBP, JPY. Please give the video a thumbs up. If you haven't done that, give it a thumbs up. And if it's your first time participating on the live stream, just subscribe to the channel so that anytime I come on live, you get notified by YouTube. Okay? Ensure you subscribe to the channel so that anytime I come on live, you get some notification from YouTube. So let's start with the weekly time frame. So if my bias on yen is bullish for today's market, then I should look for sells on GJ. Okay? If I expect yen to be bullish today, I should look for sells on GJ. Okay. So as GJ swept the liquidity residing at this previous high, let's see. Okay, I think it has swept the liquidity residing at this previous high. So after external range liquidity has been swept, we expect price to pull back to internal range liquidity. Example of internal range liquidity is we have liquidity void, we have fair value gaps. Fair value gaps, liquidity voids, breaker blocks, and mitigation blocks. All that are internal range liquidity. Okay, so price has swept external range. It is expected to go fill imbalances. Okay, that is how price moves. So last week was strongly bullish. So this was last Friday candle, right? This was last Friday candle, and before the formation of this candle here, you can see we had a shooting star. We had a shooting star. Can you see that? We had a shooting star here. One would have executed sell after the formation of the shooting star, but I think a fair value gap was created after the formation of the shooting star, and price had to pull back to fill that fair value gap. Let's go down to 4-hour to confirm that. So you can see on 4-hour we had this fair value gap here. On 1 hour, and let's go to 1 hour. So price had to pull back So on 1 hour, we had, you can see we had a fair value gap here on 1 hour. Can you see that? Can you see that? And price is expected to pull back. So you can see that could be the reason for this pullback. Okay, so though price didn't come to fill, it didn't fill the gap entirely at this point. So you can see what pattern we had here. Okay, so we had this engulfing pattern, spinning top, engulfing candle. Okay, so this is a sell on GJ. This is a sell. Well, I would advise you wait for price. You can see this fair value gap. Okay, you could wait for price to pull back to this fair value gap, or okay, this fair value gap has been filled at this point, but we have this fair value gap here that has not been filled completely. You can see this fair value gap here. So this would be a good area to consider selling. If you want to sell GJ, wait for price to pull back to this zone before you take a sell. And if you are selling this zone, your stop loss should be at this high. Calculate the risk, multiply the risk by 2. You don't know where to set your take profits, calculate your risk, then multiply the risk by 2. Okay, multiply the risk by 2. That will be your take profit. So that's my take on GJ. Is that clear? Which other pair do you want me to analyze? Let me know. Which other pair do you want me to analyze? Let's see, Euro Aussie, Euro Australian dollar. Okay. Let's start with the weekly. Euro also was strongly bearish last week, strongly bearish. So an engulfing pattern. Okay. We had okay, so that's it. So let's go down to daily. So you can see the pattern we had on the daily time frame. Can you see the pattern? This was Friday. You can see the pattern. This is a doji. This is a doji which indicates change in trend from bearish to bullish. So if today's candle closes bullish, you should look for buys on Euro Aussie. Okay, if today's candle closes bullish, then we should look for buy on Euro Aussie. Now let's go down to 4 hour. I think price pulled back to fill a fair value gap on 4 hour time frame. Let's see, let's go back and see. You can see, yeah, we had this fair value gap on 4 hour. So that could be the reason for the retracement. So price broke out from that fair value gap, and that's because there's still a fair value gap on 1 hour or 15 minutes time frame. That is the reason price broke out. Okay, we also had an order block here. So the order block could be the reason price broke out from the fair value gap. This is an order block. You don't know what an order block is, just do a Google search. Just do a Google search. Just ask Google, what is an order block? Okay? You can use Google or YouTube if you don't know what an order block is. So this is an order block. So that could be the reason price closed below the fair value gap on 4-hour time frame. So this is a buy setup. This is a buy setup. So Euro Aussie might fill these gaps. Okay, that's what I think would play out on Euro Aussie. It might come fill this fair value gap. So if you are buying Euro Aussie, your stop loss should be at this low. Calculate the risk. If you're not comfortable with this kind of risk, then ignore it. Ignore it. Okay. You must be comfortable with whatever risk you're taking in the market. If the risk is too high, if the stop loss, the market risk is too high, just ignore it. Okay. Any question, let me know in the comment section. If you have any question, let me know. We're almost done with this session. Any question? Do you have any question? Okay, it appears there are no more questions. There are no more questions. So I wish you guys a profitable trading day. Ensure you apply proper risk and money management. Do not gamble with your hard-earned money. A dollar is about 1,005 or something. So don't gamble with your. If you gamble, you will lose money. It's guaranteed. Someone has to lose money in this market for others to make money. So you have to decide if you want to be the loser or you want to be the profitable trader, the one who is cashing out from the market. It's a choice. It's a choice. Gamble with your money, you will lose it. You would lose it. No one has ever succeeded in trading gambling. No one. No one. No one. If you want to be consistently profitable, you have to manage risk. You have to manage risk. You have to manage your funds. You have to manage your funds. Unless maybe you are getting free money from somewhere. Unless the money you're using to trade is free money. And I don't think there's free money anywhere. Okay, so manage your funds. Before you execute that trade, do your analysis, know how much you're going to lose on that trade if the trade goes against you, and you should be comfortable with it. If you place a trade and you have to be looking at your chart, looking at the chart every second, you place a trade, you cannot sleep at night, it means you're taking a risk you're not comfortable with. And if you continue trading like that, you would have high BP. You have to reduce your risk. Okay, guys, so that will be all for today's session. I appreciate every one of you for your participation, and I look forward to having you in tomorrow's session. Bye for now.